All right. This is going to be a very important video if you decided last video that creating a system and a strategy was way too hard for you, right? So with that being said, I'm going to go ahead and give you mine. But I'm not going to give it to you the easy way. We're going to go and have to sit through this like a class. So let's initiate small slime screen. We should be good here. So you should see a bunch of words here. A bunch of these stuff doesn't mean nothing until I make it make sense for you. Okay? Slime trading concepts, that's me. This is my system and my strategy, how to execute a trade from start to finish according to slime. That's me again. So, first things first, before you get to the charts, you want to think about risk management. You want to drill that in your head all day. How much are you going to risk? I like to do for the day, and if I know I'm going to take 2 trades for the day, I'm going to go ahead and split that risk up between 2. Like for me, I would like to risk $600 per trade. You feel me? So, where's my dollar sign? $600 per day. So that equals to, where's my dollar sign? $300 a trade. You feel me? That's what I want to do if I'm trading my real account under $2,000. $300 a trade, $600 per day. You feel me? Just a rough ballpark. That's what I do for my 50Ks as well. How much ticks is your stop loss? 100 ticks. You feel me? What's my risk to reward? 1 to 1 or 1 to 2, depending. How much trades do I lose before I stop, or how much trades do I win before I stop? You feel me? I give it 2. I aim to take 3 trades a day. Why? Let me give you the reason. I trade Asian and I trade New York, right? I'll take 1 trade during Asian, 1 trade during New York. If I lose during Asian, I take another trade. If I make the money back, then I take another trade during New York. And if I lose, then I lost for the day. If I win, I'm up for the day. That's what I do. And then I let the day turn over, right? If I lose 2 during Asian, I don't trade New York because I don't want to lose 3 times in a day. That's basically $900. Once I lose the 600, I'm realistically done for the day, right? This right here plan is good for a 25K account, 50K account. And if you have a live account, if you have $1,200 or better, this plan is great for that as well. You feel me? Risk management wise. Now, when it comes to entries and what structure is saying, that's the beginning. So we want to come over to here, which is my Renko charts, so you can kind of understand what I'm looking at. So when I'm asked what structure is saying when it comes to entries, you feel me? Let's find structure. So because I use Renkos, you're going to pay attention to the right side of the screen. Are we making higher highs or higher lows? Or lower highs and lower lows? Making lower highs and lower lows, as you can see. You feel me? If you're a candlestick watcher, you can look over here where we can see the same thing, right? Now, if we're making lower highs and lower lows, let's go ahead and grab this, drag it here. Okay, this is looking like a sell trend. Cool. We stopped right here. We can really just do this and drag it over and see, oh, it lines up with all of this bullshit right here. So as long as we don't break above here, we should still be sells, right? Right. Okay. So let's make that red. Let's put that on all charts. Well, look at that. It lines up. You feel me? Okay. So market structure is saying sells, and this is on NQ. I'm normally a gold trader, but I'm showing y'all NQ. So if we're cell structure, and let's say this haven't happened yet because this was this week, what else do you want to look for? What is price doing? So if we're here, price is falling. Prices fell. It needs to retest. What did it retest? These lows right here instead of coming back to the neckline. So, right? And then it made new lows, and look what it did again. It hovered on those new lows. So we can still see prices selling, right? Look. Now, if price is over here and we're selling, what is our next thing to do when it comes to entries? Wait for price or accept where it's at. So if price is here and I say we're selling, I wait for price to throw a sell setup and I take it. That's what I mean, wait for where it's at. Or I wait for price to come back within an area of my interest, which would be up here or here, and I will fly into a smaller time frame and look for a sell setup. You feel me? So based on what price is doing, if I come to the market and I see this aggressive push down, of course, I'm waiting for either a retest up here in the supply or demand zone, whatever that is, or I'm waiting for a support and resistance play from the swing lows, right? So settle or wait for it to fall in your lap. Simple as that, right? What's next? Exits and trade management. Where's your take profits? Okay, so once we find what market structure is, you can clearly tell where you would like to get in and get out, right? Okay. So if you were to take a sell in this area, obviously you would like to get out in this area because you see price beginning to do some craziness, right? If you come up here and take a sell here, obviously you like to get out here or in this swing low down here, right? So you want to have these places marked out so you can know what you want to see, right? If you want to see down here, what price is bouncing right here, maybe this is an area you want to get out at. But you also want to have it marked out so you can not get trapped. You feel me? When do you cut a loss? Me personally, I use a 100 tick stop loss. So with that being said, at 100 ticks, I want to get out my trade. You feel me? Realistically, 60, 70 ticks in the drawdown, I want to get out my trade, right? But let's say I take this W, right? I get in here, price shoots up, don't give me full TP, decides to come down. My 100 ticks it's what? 3, 4, 6. NQ is bad because it's multiple ticks, but let's say we went on gold, my 100 ticks is, let's say my stop loss underneath here, but my 100 ticks got it underneath here. You feel me? Now I'm like, if we break these lows, I don't want the trade no more. So instead of getting it all the way down here, I'll just cut it here. You feel me? So I have all of this stuff planned out. Do I trail or do I just aim for full TP? So because I aim for one-to-ones, what I do is I get into a trade, 70% of the trade, I go break even. Simple. So if I aim for 100 ticks, at 70 ticks, I'm going break even regardless. Gold has a tendency to pull back. And Q, when it pushes up 70% of the trade, it's not coming back. There's a strong possibility it's not coming back. You feel me? I basically just explained everything for you guys. I didn't give you my strategy. That's going to be in the next video. But this video is basically giving you my system. As you can see, because I use Renko's, I can find market structure a whole lot easier than you guys can. If you want to learn how to use Renko's, let me know in the comment section below and I'll go ahead and show you guys how to do it. Thank you. Have a great rest of your day.